Well, hello there. Welcome to the PRUSKOP Podcast. My name is Megan Prusko, and I'm a realtor here in Edmonton, Alberta. I love talking about all things entrepreneurship and investment. I ask a lot of questions, so a podcast just felt natural to me. Today, we are talking to our very special guest, Shabir Madhas. He is a residential and commercial mortgage broker. We talk about the difference of using your mortgage broker versus your financial advisor through the bank, what to expect when you're applying for a loan, how to pay your mortgage down faster, different mortgage products that both investors and primary homeowners can use to their advantage. One of those products literally just got released 2 days ago. I hope you enjoy the conversation just as much as I did. Well, hello, Shabir. Welcome to the PRUSKOP Podcast.
Thank you so much for having me. I'm so excited to be on a podcast.
Today, we're going to be talking about the advantages of using a mortgage broker and different mortgage products you can play with for our clients so that they are getting the best financing structure for what their goals are. What is a client story of yours that makes you smile to this day, and how did you help them?
I do residential and I do commercial as well. So for one residential one, it was a newcomer to Canada. People migrated here from India, worked, I think, two, 3 jobs. It really, really hard. They went to their bank. The bank denied them. And we got the deal done. It was a 2-bedroom condo, nothing spectacular. But for them to own that property and have it in their name, just to see those clients' face smiling, and they still calling me to this day, Happy Christmas. They're Hindu, so Diwali comes up, they send you messages. And that makes me feel like I'm doing my job properly.
Us as realtors, or you as mortgage brokers, just in the residential world, we are helping our clients and we are joining them on their last page of their most recent chapter of their lives. It is a big moment, and that's not something I handle lightly. It is an honor and a privilege to help people and see that you can actually make a difference in their lives.
It gives you a good feeling inside when you know you're completed it, and when you give them the keys, and it's the best feeling in the world.
It's so good. All right, enough with the mushy gushy stuff. What is the difference between a mortgage broker, which you are, or being a lender?
Right. So you have a mortgage agent that works for a typical bank. CIBC, RBC, TD, they can only sell their products and services, and they're mandated by their guidelines of what you can use to qualify to get a mortgage. When a client comes to us as a broker, we have a whole group of lenders. So we have 35 aiming from the typical A side to a B side to private lending. So for us, we can take that client, find it where they best fit. And obviously we have better policies and guidelines that we can use to help them qualify.
I had this one client, they were looking to sell their house and buy a new one. And their financial advisor said, you can't buy this place until you sell this one. And I'm like, okay, well, what about a bridge loan or this option or this option? And the husband, he looked at me and he was like, how come my realtor is teaching me this and my financial advisor isn't giving me these options? I'm like, well, that's why you should have used Shabir, and that's why you should talk to him now, because he knows about all these tips and tricks, which they're public knowledge.
Yeah, exactly. It's not a trick or anything. Like you said, it's just product knowledge.
If I was applying for a mortgage, Shabir, do I have to pay you for my pre-approval or for your services?
No, our services are free. We're not going to ask you for no money. We get paid by the bank. The bank is going to compensate us for bringing the client to them. The only time we've ever charged a fee would be when we go to a private lender. And that's special circumstances. Private lending is a temporary solution. It's not a long-term solution. It's a very short-term solution to get you back to where you should be.
Is there a really simple calculation people can use just to get a ballpark of what their purchasing power is?
There's a lot of online calculators and stuff like that, but that's just a generalization.
Yeah.
So you're going to say, I make $100,000 a year. I want to buy a $400,000 property. The online calculator is going to spit out, yeah, you qualify for this much. But they're not taking into consideration all your debts every month, the property tax on the property, the heat, that's also incorporated in the calculation. And are we going to amortize it over 25 years? Are we going to amortize it over 30 years? There's so many factors in it.
What are those like hidden factors that people often overlook?
Yeah, so the income, their debts per month, right? What if they had some credit issues back? What if they had some collections? What if they had a bankruptcy? The computer's not asking you for that.
If I'm talking to a brand new client, I always ask them, like, have you been pre-approved yet? If they say that they haven't been pre-approved, I'll refer you, of course. And then if they're like, oh, we don't need a mortgage broker, like we're fine for our finances, how are you going to pay for this? They're like, well, with a mortgage, but we're going to put like a lot down. I was like, okay, well, unless you are paying for this in full with cash, get a pre-approval.
Yeah, yeah. And people that have multiple properties, I always suggest getting a pre-approval because now you have debt. You're carrying on debt and adding on debt on top of that.
If I provide you all of my documents to get a pre-approval, like my T4s, all of that, how long is it going to take you to determine my purchase price?
Typically, turnaround for pre-approvals for us is around 24 to 48 hours.
Say that my household income is 120 grand a year.
Yeah.
Assuming that I have good credit and no other debts, what would be my purchasing power if I had a $200 a month car payment versus a $400 a month car payment?
So say, for example, $120,000, we'll say $400,000 your purchase price with a $200 loan over 25 years. If you add an extra $100, you'll probably just drop your purchase power by say maybe 10 grand.
If you're paying $800 a month for your car, which a lot of people are, like that's 80 grand. So it doesn't matter that you only have $1,000 left on your car payment because they're still seeing $500 a month as a liability. You can refinance your car loan, which will extend the term that you owe it, but your monthly payments will go down, which will free up some purchasing power room for your house.
Less debt, more purchase power.
What is the difference between fixed and floating, and are they tied to different things that determine what number they're at?
So fixed rates is based off the Canada 5-year bond rate. Okay. And the Canada 5-year bond rate fluctuates due to external factors. When we talk about the variable rate or the floating rate, as you call it, that is based on what the Bank of Canada lends money to the bank.
If I was on a variable rate that I could switch to a fixed rate, but if I was on a fixed rate, I wouldn't be able to switch to a variable rate unless my term ended.
Yeah, yeah. Because on a floating rate, your interest is up and down. With some of the lenders we choose, like say, for example, you're at 5% and your payment's $1,000 on a variable rate. Now, say if the variable rate dropped by 0.25%, then your payment would drop as well.
As of right now, what is the best rate you can find for a 5-year term for floating versus fixed?
If it's an insured product, meaning less than 20% down for a fixed, we've seen rates as low as 4.19 on a 3-year, right? When it comes to putting down 20%, where the insurance is now on the lender side and they're going to pay for it, you'll see a bit of a higher rate. So on that side, you're looking at probably around 4.49, 4.59.
On a $450,000 loan with 25-year AM, what would 25 basis points or a quarter point of interest cost me or save me on the flip side?
So for $450,000 and you put down 10%, okay?
Okay,
so 10%. Now, at 4.5%, your payments are about $2,350 a month, okay? Now, if the rate drops to 4.25, okay, your payments are $2,290. So a difference of $58.61 a month.
I did 25-year AM, 5% versus 5.25. In total, at the end of my 25 years, it would be a difference of paying $809,000 versus $829,000 all in for my house.
Oh yes, sorry. At the end of the term.
No, it's good to know both like the monthly and like the overall. But a quarter point or 25 basis points could save you 20 grand. And of course, they will fluctuate. Your terms will fluctuate. So
exactly.
But just to give an example of even a quarter point can make a really big difference.
Huge difference.
Something that I wanted to ask is how can we speed up paying off our loan?
So the banks give you privileges, meaning you can put down lump sum payment options during the year. So if, say, for example, you have a 3-year term, each year they can say anywhere between 10 to 20% of their original mortgage amount, you can put straight onto principal. Okay, it can be the lump sum payments or you can make gradual payments over the 12 months. Okay, another option is people do accelerated bi-weekly or semi-monthly payments. And what that does is basically you're putting one extra payment or two extra payments onto your mortgage. And you're going to just reduce your amortization. What I advise my clients sometimes, I'm like, listen, if you want to make that option, and I personally do it myself, is I take that extra payment I want to do every month. I put it in a high interest savings account. And at the end of the year, I've made a little bit of interest. I've taken that money and I'm going to use a lump sum payment option. That's going fully onto the principal.
If you're looking to get 4 doors, obviously a duplex with legally suited basement is a great option. But why is it important for you on the financing side to make sure that that property is all on one title versus 2 titles?
When you have 2 separate titles, it's 2 separate units. So you could typically go, yes, I'm going to owner occupy the first one at 5%, but in the second one, because of the second title, you have to put the 20% down. Because you're not owner occupying it, it's classified as a rental. If it's one title, one person living in one unit, and the other 3 are going to be rentals, it's fine with the 10%.
How does rental income affect a residential property?
Typical A lending banks like say RBC, CIBC, TD, all of them use say 50% of rental income to help you qualify. Us brokers.
So what does that look like? Like if I'm renting out my basement, just easy numbers, for $1,000 a month, then what does that $500 go towards?
It helps you qualify for the property.
So that gives me $500 worth more of
additional
my income?
Yeah. So it helps for your purchasing power.
I know a lot of buyers, when they hear bridge loan, they're like, what does that mean? Like, what am I getting myself into? So when do you see bridge loans get used?
Typically is when a client is selling their current property and buying another property, and the closing dates are different. For example, they sell their property and that's not closing till the 30th of the month, and their current property that they've just bought is closing on the 15th of the month. So we have to bridge the gap from the 15th to the 30th with the lender so that there's enough money. So the bridge loan comes into effect to just bridge that gap. You're just going to pay for it. And it's a daily compounded interest.
What does that actually look like?
There's a fee. So like a $400 or $500 fee to set up the bridge loan. And banks usually will do that for you on our side. And then rates are typically, so it will be prime plus a couple of points above that. So say prime is 5.45, and we can just say the bridge loan interest rate is going to be an additional, say 2%. So your rate would be 7.45.
What is a purchase plus loan?
So what people are doing with a purchase plus loan is they are buying a property and they want to do their basement up and make it a legal suite. They're trying to get additional funds to finish off the basement and incorporate it into their mortgage. Or they're buying a rundown home and they're going to renovate it and they're going to own or occupy it. So the banks are going to go on the future value of that property to qualify them and give them that additional funds to fix it. But what they do is they hold that money back, and there's some requirements like they would have to get a contractor, you have to get an appraisal beforehand and appraisal after. There's even a new program that's come out as January 15th. Now it hasn't rolled out yet. It's being implemented. It's like a secondary loan on your property, but that is to help people make a secondary suite. The governments have approved that type of program, and they have money set aside and everything like that. We're just waiting for banks now to come on board and see what kind of guidelines they want. And it's a relatively low interest rate. I think we're saying around 2%. I think the max you can get is up to like 2 million value of the property. The value can't be any more than a certain amount, and you have to use that money strictly for that suite. They approved it on the 15th of January. It's only 2 days ago. 2 days ago.
It's 2 days ago. Well, those are all of my questions for you, Shabir. How can people reach you?
I have a website, www.mrmortgageloan.com. My online application is there. Click on it. You can reach me by phone, 780-707-9551. And you can Google my name. All my information is there. If you just want to have a conversation, I'm okay with that too. Doesn't necessarily mean you have to take a mortgage from me. I'd love it. But if not, I'm always here to help. Doesn't matter.
Awesome. Yeah. Well, thank you so much for your time, Shabir. All right. Well, till next time.
See you, my friend. Take care.
Bye. Thank you again to Shabir for joining me on this episode. I always enjoy speaking to him, and I really hope that you learned something. If you're looking to reach out to Shabir directly, you can do so through his email, phone number, or website, which will all be in the description below. If you liked this episode, then actually like this episode and subscribe. I really enjoy creating content for you guys, and your support makes it that much more enjoyable. There are some really cool topics that we're going to cover in future episodes that I am super excited to share with you. You do not want to miss out. Trust me. Thank you for sharing your time with me. I hope you have a great day. Bye for now.